Hello everybody. So today we will start this video with the meaning of bookkeeping and then definition, and then we will go through the characteristics. So first of all, what is a bookkeeping? As you can see that it is a combination of the two words, that is book plus keeping. Bookkeeping. So book here refers to the books, all the books which are maintained by the business and in a systematic manner. So, thus, we can say that recording the business transactions in a systematic manner in the books of accounts, that is called the bookkeeping. Okay, so it involves identifying the financial transactions, mirroring them in the terms of money, recording those financial transactions in the books of accounts. Okay, so let's go through the definition. We will go through this the caller. Bookkeeping is a process of analyzing, classifying, and recording the transactions in accordance with preconceived plans. Or we can say it is an art, science of recording correctly the books of accounts, all those business transactions that results in the transfer of money worth. So it is art of recording business dealings in the book. So simple words in simple words we can say that bookkeeping is a process in which books of accounts, they are maintained, all the transactions related to the business which are of financial nature, they are simply recorded in those books of accounts. Okay, so next, going through the we can say distinction. Yes, if we see that what is accounting, accounting is further, it is extension of the bookkeeping. We can say that when the bookkeeping ends, accounting starts, because bookkeeping is just recording the financial transactions in the books of accounts, and then after it is done, the process of accounting starts. So here you can see that where bookkeeping aims at recording the business transaction, accounting aims at recording, classifying, summarizing the business transactions and interpreting the results. So thus it is a far more bigger process than the bookkeeping. Once the transaction has been recorded, then accounting, it starts with classifying those transactions, then summarizing those transactions, and then last is interpreting the results. Okay, so here let's go to the difference, that it represents the art, aspects, but accounting, since it is much more extension of the bookkeeping, thus it is a science. Okay, this is elementary stage, which is a beginning stage, starting stage, but it is the next level, that is a secondary stage. The art of bookkeeper is clerical nature. Yes, it is this book, the process of the book, the work of the bookkeeper is completely a clerical nature, but here it is a specialized work, because it is a next processes for classifying those transactions, then when we classify, then we provide a summary for that, and then interpret the results. Okay, thus next start with that elementary knowledge, where we can say that elementary knowledge is required over here. Okay, so starting with the features of the financial accounting, like what are the features of the financial accounting? So first step is identify. We have to first select the transactions events of special organization of a specific organization, and decide the business transaction to be recorded in the books of accounts. Okay, so first of all we have to decide the transaction which are to be recorded. It just simply identify those transactions. Then we have to measure, we have to see that all the transactions which we see are important in a particular organization, they should be measured in the terms of money only. because the transactions which cannot be made in the monetary terms, they are not recorded in the books of account. Okay, so that is not the part of the financial accounting. So first of all you have to identify, then you have to measure that those transactions should be in the terms of money only. Okay, so once you have measured, once you get to know that these are the monetary transactions, then you record those transactions. You record day to day business transactions in a systematic manner. Okay, in the books of account, in the original journal, and in the books of original entry, and that is what, that is a journal and other subsidiary books. Okay, so we will study all these concepts very thoroughly in our next videos. So after recording all those transactions of the monetary terms in the books of accounts, next is you have to classify. Classify means you have to group those transactions. Now providing the group means those groups should be of same nature, of same account at one place. Okay, so after proper recording has been done in journal or subsidiary books, they are to be posted account wise. Okay, so this recording is basically done in journal and other subsidiary books, but classifying, that is done in a ledger. Okay, that is done in a ledger in which the transactions of same nature, they are recorded in one account. For example, the transactions related to purchases, they will be recorded in one purchase account. Transactions related to cash will be recorded in the cash book. Okay, so that will all transaction related to sales will come in one sales account. Okay, so that is called the classifying. So recording done, classifying done. Next is summarizing. Now summarizing, that is what, some means providing a summary. So how? It is art of condensing the recorded information in a manner so that the results of the performance of a particular period can be determined easily. This process involves preparing the trial balance, trading and profit and loss account, and balance sheet at the end of the year. Okay, so summary, for the summary part we prepare trial balance, because trial balance provides the arithmetic accuracy of the transactions. Trading and profit and loss account provides the net profit or net loss of the business, and balance sheet, that shows you the financial position of the business. So all these accounts, they are telling you something regarding your business. Okay, they are providing you the summary, whether it is the arithmetic accuracy, it's the net profit